Let's go ahead and get started. This thing is being recorded. My name is Tim Hart, branch manager of VanDyk Mortgage here right in Fort Myers, Florida. Appreciate y'all being with us today. Today we're going to be discussing the FHA 203H program. This has been around for a while, but those of us in Lee County, you're going to become a little more familiar with it. This is for presidential disaster areas and Fort Myers, Cape Coral, San Fort Myers Beach, Lee County, where we're from, is the epicenter, basically ground zero, right, of Hurricane Ian. So we want to make sure we get this information out to everybody, especially the realtors that are on the call. We think this program is going to be very helpful to you, your clients, and your business. We are recording this just so you're aware. So if you do know someone that, maybe they're missing it or something like that, just understand that we are recording the video as well. And so we're going to go into some details about this program. We'll have a question and answer session as well. The chat is open. If you have any kind of questions, you want to drop them in there. We do have everyone muted. You are able to unmute yourself, but if you do have a question or something, just do the old raise your hand. I don't know how to explain how to raise your hand on Zoom, but you guys have done Zoom enough. I'm sure you can figure that out. So want to get rolling on this. And before we do, just so you're aware, VanDyk Mortgage, I am the branch manager. We have a whole team licensed in about 8 different states. We are a mortgage lender, and we are happy to help you guys in any way, shape, or form. All right, but we are in Fort Myers. We have loan officers in South Carolina, Indiana, up in Ocala. So we're all over the place. But this will not be a VanDyk Mortgage pitch session. Okay, so let's get started with this. First off, with it being a hurricane, we got declared a disaster area here in Lee County. And what this program is, it's just FHA. Again, it's called 203H. You're going to hear programs like a 203K, right? That's a rehab loan. 203H is the one we're talking about. 203B is a normal FHA mortgage. So this is 203H, 100% financing for disaster victims. And it's only for FHA, okay? FHA loans. And these areas have to be declared disaster by a presidential declaration. And so where are these areas? So these are the counties as of today that have been declared a disaster area. For us, we're in Lee County. You're surrounded by Charlotte and Collier County, but there are a lot of counties that have been declared a disaster area. And talking with other agents, Sarasota, Bradenton, Port Charlotte, there's a lot of people that have been affected by this. We've been seeing it over and over and over again and hearing about it. And so these are the areas. Oh, and by the way, before I forget, this whole presentation, understand you guys had to register to join in. We will be emailing this whole presentation to you. So just keep that in mind that you'll be getting the information sent to you when this is done. And again, if you have questions or something, we can save it for the end, or you hit it in the chat if you want. But these are the counties that have been declared a disaster area. So keep that in mind when you're talking to clients, or if you are wondering if you're in that area. Now, what does this loan entail? And so this is where I think, for me personally, looking at it, this is going to be a pretty big deal for the people that out there that are currently renting. I think this is going to be a big market for people that are currently renting that got displaced from their home. The home is not livable anymore. All right, that's what this whole disaster area is declared as. If your home is not livable, meaning the drywall has to get cut out, or it's completely just destroyed and leveled and has to be rebuilt, you can qualify for a 203H mortgage, and this is 100% financing. So it's no money down, 100% financing loan. You can be a renter that has been displaced out of their home, or you can be a homeowner that has been displaced out of their home. Rebuild time, you guys, we're here in 12, 15, 18 months, right? For some of these houses already. That's a long time. This program for those homeowners are going to allow them to buy another home. And we're going to get in a little bit more of the details right here. This right here, I don't know if you guys see my cursor or not, but this program does not need to be used right away. You have 1 year from the when that area was declared a disaster, which was the 29th, I think. Seems like it was years ago, right? For those of us that went through it. But it does not have to be used right away. You have 1 year to be able to use that program. Okay, so if you're a renter, you know someone that's currently renting, make sure they save some of that paperwork, landlord's information, proof the house was destroyed. Okay, that's going to help them out a lot. They have 1 year. The other cool thing is they have the option to leave their current house that they own. Okay, meaning go buy another primary residence. They can either buy in the same area, like if you're in Fort Myers and hey, I don't want to live on the water anymore. I want to live, further inland. You can buy in Alva or out whatever in Lehigh somewhere. Okay, you can still live in that same area, or you can move anywhere you want. Okay, in the nation. You're not just limited to where that disaster area happened. You can move out of the area. All right. So make sure to go over that. Next, documentation. How do we prove it's unlivable? All right. So if you currently live there in that house and you are the owner, you're going to want to make sure that you have the insurance claim, right? All the work that's going into it for the insurance. You have a FEMA inspection you can do, anything you can show to prove that that home was destroyed or unlivable, right? So, also if you're a renter, it can be a letter from the landlord and also their insurance proof as well. But again, this has to be damaged to the extent where the reconstruction is going to take 12 to 18 months, or it's just going to have to be a tear down. All right. Again, 100% financing, you guys, for these programs. Now, we're going to get into the details of what the what's going to kind of be needed by the borrower. We want to make sure we tell you guys one thing about VanDyk Mortgage is VanDyk Mortgage can actually, we are a mortgage lender, we can underwrite an entire file without them being under contract. Why is that important for this situation? Okay, is that when you have someone that's just went through the stress, and if you're from our area, you know a lot of people that are like this, if they just went through all the stress of losing all their stuff, moving out, living without power for 2 weeks, 3 weeks, whatever it may be. The last thing they want to worry about is having their whole loan underwritten and approved while going under contract. We can make sure this buyer who's went through a lot has already been underwritten and approved before they go out looking for that new home. All right, it'll give them an extra bit of peace of mind. It'll give peace of mind to the realtor as well, help your offer get accepted. But it's a huge benefit that we want to make sure you pass on to those renters that are looking to buy again. You do want to take as much stress off them as you can. Now, let's get into, I don't see any questions in the chat. You guys seem to be good to go there. All right. With the housing payment history, this is mainly for if you currently own a house. If you currently own a house and that house was destroyed, hold on one second real quick. Oh, my bad. If you own a house, hey, Jerry, can you guys hear me okay? Yeah, okay, good. Just make sure. If you own a house that's been destroyed and you have a mortgage on it currently, okay, you don't get a mulligan and leave that one alone and never see it again, okay? You've got to be able to prove that you're working with the current lender for that house, that you're working with them, and that you're on a payment plan with them, that you're going through the insurance claim process. All right, you've got to show and prove that you are working with that lender. Late payments on that home are not going to get counted against you. All right, so it's very important. If you currently own a home, the late payment's not going to be counted against you, but you've got to prove that you're working with your current lender to resolve that situation. And again, if that loan is your primary residence, this FHA 203H program will allow the new one to also be your primary residence. All right, so you do have that available. Credit scores, we're going to go into that in a second. But again, late payments on that mortgage, not that big of a deal. A normal time frame, yeah, that's a big deal. You're late on the mortgage. But in this case, for the disaster area and the 203H, it's not looked at. Okay, it's understood almost. Same with liabilities. We're going to be able to look at certain liabilities and say, hey, this happened. They weren't able to approve. They weren't able to pay that bill, or got totaled another vehicle or something like that. So there's going to be some grace given on some of these credit derogatories. So keep that in mind. Don't ever let someone tell you, if you're a realtor on this call, that they don't qualify. I don't qualify, my credit stinks, or I don't qualify, I was late on payments. Let them go through the application process with a lender that does this program. By the way, we're finding out more and more, everyone doesn't do this loan. lender wise, just so y'all are aware. You know, you may have your own preferred lender. Make sure they do this program. If they don't, we're happy to help. All right. So loan limits and credit score. Minimum credit score for this program is a 580 credit score. Now, this part right here, I want to make sure we add this in. This is FHA has loan limits for every county in Florida. So, you know, we have, you know, about 50 people on this call here, and that could be a lot of different counties, right, in Florida. And so you've got to pay attention to your loan amounts or loan limits. I'm sorry, loan limits in your county. You know, we're in Lee, maximum loan limit, 420,680. That's kind of the standard in Florida. You'll see that most counties have that loan limit. Why are we bringing that up? Well, because some of these people may be coming off of Sanibel, right, or Fort Myers Beach, or down in Collier County. They may be looking for $500,000, $600,000, $700,000 loans or sales prices. I'm sorry. So keep these loan limits in mind, right? You don't want to be looking, you know, toting around someone telling them it's 100% financing, and for example, Manatee County, and you're out looking at $600,000 houses. Okay, that's going to blow up. So keep in mind the loan limits in your county are all different. Again, we're going to send this whole PowerPoint will go to you via email. All right, those are loan limits for FHA, and this is any FHA loan, by the way. It's just not the 203H. Okay. Terms of the mortgage. You have a 10-year, 15-year, 20, 25, 30-year fixed. Okay, these are purchases only. These are not refinances. They are purchases only. What can they be used on? Single family homes, which includes 1 to 4 units. 1 to 4 units, like duplexes, right? Those qualify. Manufactured homes, right? Some people I've talked to in our business, they'll kind of chuckle when you mention manufactured homes. We don't. All right, they're affordable out there. There are options for people. We can do FHA 203H loans on manufactured homes. Condos are the ones you got to be worried about. All right, they're going to be the harder ones to approve for an FHA loan. They just are. They got to be approved FHA already. If they're not FHA approved, you got to go through a spot. It's called a spot approval process. It's not easy. Okay, so I would advise single family homes, manufactured homes, townhomes, things like that. Okay, and it must be your primary residence. I do have James Jablonski that's he's going to be in the comment or the chat also answering questions. He's our rep for American Financial Research, so I appreciate you being with us, James. All right, so there's the property types. Let's keep going. And I got some commonly asked questions coming up here. I want to make sure we review all of these with you guys. Can a person that currently has an FHA loan on a home be eligible for another FHA loan? Because normally you are not eligible for that. And so you can, okay? You can have the 2 FHA loans at once. That's not a problem with this program. I'm gonna pop over here real quick. I see a couple of questions. I want to answer these. Is there an age of manufactured home? Susan, yes. For any loan out there you guys do, you always keep the date, the year 1976 in your mind, okay? Manufactured home has to be 1976 or newer. You usually want it to be a double wide. I stress that. Single wide financing is available. I would advise you to try to stick with double wides. Okay. So 1976, double wide. And then the other thing that's very important in our area, you've got to own the land. Okay. You have to own the land. That's a big one. Does that answer that, Susan? I see you on there. Good. Okay. Carolyn, buyer can purchase anywhere in Florida. Yeah, anywhere in the US. And Joe answered that. Look at him. So anywhere in the US. All right. What documentation must be provided? We talked about that. That's with any kind of FEMA inspection, home inspection, contractor inspection, insurance claims, anything that they can provide for that is what we're going to use to prove that their other house was unlivable. All right. So keep that in mind. And for the renters, it says here, insurance company for the owner or the landlord itself. There is a link on this when we send it out where you can check the disaster areas, because sometimes they do update that. FEMA's website, not overly user-friendly, okay? It's very hard to navigate that thing to find a disaster area. Took me a while, I won't lie to you. So it's a lot of different drops and clicks. So careful with that one. All right, next one. What happens to the borrower's mortgage on the destroyed house? We talked about that. You still owe it. Sorry. You're going to have to pay that mortgage back still. All right. Work that part out with your lender. And by the way, any of your clients that you know, I'm saying clients, there's a lot of people on this call are realtors. But advise your clients to make sure that if they are behind on their bills or they're worried about paying their bills, they need to contact each creditor. They need to contact each creditor and tell them, hey, I was affected by Hurricane Ian. I'm struggling, right? It's tough for me to make these bills, the payments on them. Make sure they let them know that, because the majority of these creditors are going to work with them. Okay, they're going to give them some grace, a month off, 3 months off, whatever it may be. So just make sure they have that conversation with their creditors. You do not want them to just throw their hands up and say, who cares anymore? Okay. It takes years to make good credit, to create good credit. It takes a month or two to ruin it. And then it takes another few years to make it back to being good again. We got a message here. What about if the tenant lost their home due to the hurricane they were renting? Yeah, this is perfect for that for them. They just have to, if someone's renting a home again, if you're renting a home and you're in a disaster area and that home was destroyed by the hurricane, or they have to move out for a certain amount of time while it gets reconstructed, they can qualify for this program. Okay, this is what they're made for. Is it Lucena? Yeah, so it's made for them. All right, what happens if the borrower does not have flood insurance and needs floods for living expenses? We don't have anything for that right now, guys. So flood insurance, and if you're from our area, you're hearing horror stories, right? People, they didn't have a mortgage on their house and they didn't carry flood insurance because it was like 15 grand or 20 grand. It's too much money. Boom, flooding comes in. FEMA's giving like 35 grand out to, as a maximum payout. And these people are, they're gonna have to rebuild with their own money. Or you're going to see some of these people just sell and leave the raw land and call it a day. Going to be really, a lot of sad stories out there and stuff we've all seen. I know everyone on here, if you're from our counties, you've seen these stories, these people, right? It's just horrible. But there's nothing we can do right there for that. What if they were displaced? Meaning like, let's say they worked on Fort Myers Beach at a bar that, got wiped out. Well, now 2 months later, they landed a job somewhere else in Cape Coral or wherever doing the same type of thing. You can have these job gaps. All right. So the job gaps are allowed. Where job gaps become a problem is if it's over 6 months. Okay. If it's over 6 months, that's where you're going to have a hard time getting a normal mortgage. Now, also the other thing is job gap. What are they doing currently, or what were they doing currently? What are they going to be doing now? All right. So like, I was a server at a hotel bar, the Diamond Head Resort or something. And, now I'm 100% commission selling solar panels. That's not going to work. Right. So we got to have a continuation of the work, same line of work. But again, every situation is different. Do not let your customers tell you they can't get pre-approved. Okay. I just want to keep stressing that. Have them go through the application process. That's for any customer, by the way, not just these 203 age customers. Let your lender tell them they can't get pre-approved. Let's see here. No more questions there. Okay. What else? Oh, seller concessions. This is another important one. We were seeing seller concessions come back for a little bit as the market was kind of turning. This is where the seller can contribute towards the buyer's closing costs. This is allowed, okay, for closing costs for this program, FHA 203H. The borrower it's 100% financing, but there are closing costs. Okay, the closing costs have to be paid for by the buyer or the seller, or a mixture of both. The seller can kick in up to 6% of the sales price towards the buyer's closing costs. $200,000 loan, they can kick in $12,000. All right, up to $12,000 if they needed to. Or the buyer has to pay their own closing costs, which the closing costs can be gifted from a family member. All right, so you do have the ability to get a gift for those closing costs. Then we have, what if a homeowner does not make a payment? We talked about that already as well. As far as the question, the presentation goes, I got just 2 more things I want to talk about real quick, and then I'm going to open it up, see if anyone has any questions or concerns. We're making really good time. Kind of surprised by that. One thing we're going to start doing here, because as a lender, we are really trying to find a way to add value to y'all, in our area, especially there's been a ton of people that have been affected by it. So we are going to have a lot of webinars and content coming up here in the future. A couple of things we're going to be talking about, want to tease you a little bit. We have Construction Perms. for FHA loans, VA loans, conventional loans, and USDA loans. You're going to see a webinar come through for that. You're also going to see something very exciting with construction perm loans. Construction perm loans is someone wants to build a house on their land, or they want to find the land and build a home at the same time. We're going to have these options for them. People are going to be asking about this to you. So this is why I want you guys to be aware of this as we go through. With the construction perms, we are also going to have construction perms for self-employed borrowers. This is going to be a bank statement loan. It's crazy. Okay, bank statement loan for a construction perm. And we're going to have for investors what's called a DSCR, which is where we only use the rental income for a house to qualify them. We don't worry about any of their other debt or their other income. It's just about the rental property. Okay, so these are two huge things for the construction perm market. And we're also going to do a business planning session as well. And then we're going to generate a monthly training session for all realtors called Mortgage Financing Made Easy for Realtors, especially for the newer ones that are popping on. They'll love it. A couple questions. Oh, Ashley got it. There you go. But I also want to offer this to you guys as realtors. We do have co-branded flyers for this. So if you do want a co-branded flyer, just text the number 203H to our office line. Ashley, Kelly, or someone else will get you out a co-branded flyer so you can share this information with your buyers, or whoever you want on social media, email blast, whatever it is, to try to help people realize there's options. I mean, if y'all from this area, Collier County, Charlotte, Lee, you see people living in tents. There's people out there sleeping in tents and stuff in their front yard. So just understand you want to get this information out to them so they have it. Now, I do want to make sure that we do open it up for questions. If there is any, does anyone have any kind of questions or anything we can help with right now? Any kind of scenarios? We do have we're a couple minutes ahead. I was planning on about 30 minutes, but does anyone, I almost pulled you guys in there. Is everyone good? No questions? No craziness? No unfun? All right. Well, let's see here. I had many, but we answered them. Okay, good, Crystal. Well, I appreciate it. Well, hey, I hope you guys found value in what we talked about. And, it's nothing overly intense, this program, but I felt like we all need to get together and talk about it some. So if you have any questions or concerns, I want you to be able to know my whole team's here to help you, your clients. If you are a person that needs this type of loan, just call our office at any time. We are available all the time to help y'all. Like I said, tons of loan officers. We're licensed in 9 different states as well. VanDyk Mortgage is licensed across the nation. So, you know what? Do I still have people on here? Hold on one second. I forgot about something. I almost pulled a Billy Mays. Remember that? But wait, there's more. Okay. I forgot about one thing, is that when these people are going to, when they want to leave our area, if they want to leave our area, because we don't want to leave our area, right? You don't want them to leave Lee County or Collier or Charlotte, wherever you're at. Let's be honest, some of them are. Okay, some people want to get out of here. They've had their dose of Florida and they want to kind of move out to the mountains or something like that. We are licensed in these states to help with that. You as realtors can get that referral fee, right? You to someone that's a realtor out of the area as well. I want to make sure I brought that up. I forgot to bring that up for you guys, for our agents. So just keep that in mind. They do not have to live in Florida. You can get refer them to an agent within your network up in another state, and we can also help them with that loan. So I'm looking here. Sherry, thank you for calling me Mothy. I appreciate that as always. If y'all need anything else, just reach out to us anytime. Oh, someone snuck in a question. I knew you guys would do that. Renee said, what about small businesses? For this type of loan, for the 203H, small business, you're still going to have to go through the tax return process. I don't have any kind of bank statements or stated incomes or anything else like that. The 203H is going to have to go through with the W-2s, the pay stubs, etc. Where the small business person may come into play is when you do a construction perm with the bank statement loan. Maybe able to help with that as well. All right. And then keep an eye out. Also, we're going to be doing a 203K one sometime in the future. That's a rehab loan. There's more questions. Hold on. Janet said, someone else asked about a construction to perm loan. Is this allowed? Not on this program. Okay. There is something called a 203K. It's a separate loan. That's a rehab loan. It's a separate loan than this. We will be offering up construction perm loans as well. So there's going to be a lot of financing options to rebuild. Just keep in touch with us, with the loan officer that invited you or us, and we'll be happy to help all of y'all with any of these financing questions. All right. Does anyone have anything else? I can unmute you. You can unmute yourself if you want a question or concern. If not, we're going to wrap it up. 30 minutes, man. I'm pretty pumped for you guys. You guys did good. All right. I think we're good. So,
Tim.
Oh, there it is. Yes.
Yeah. So I was trying to type my question, but I figured it'd be easier to answer.
Is that Carla Clutch?
It is. Yes.
What's up, buddy?
So this might be a dumb question, but I just want to make sure I understand it correctly. So the person with the destroyed house, they have a loan in place with a loan payment that they're already paying. Now they're going to prove that it's unlivable or whatever, and we're going to go buy a different house. So does that loan payment affect their debt to income ratio to get the other loan?
No. So
this totally gets wiped.
Yeah, it will not be counted. I mean, we got to acknowledge it. We got to prove that they're working with the lender, to fix it. They're going through the insurance process, but that payment will not be counted against them.
That's awesome. Okay, thank you.
Yeah, no problem. Thank you. Thanks for being here.
Yeah.
Anyone else got anything else? Anyone else got anything else? I don't think that sounded right, but all right. Hey, if you guys are good, we're good. I appreciate your time. Be on the lookout for more events like this. We're going to be doing, like I said, all these other webinars and stuff. And as always, we're here to serve. So y'all let us know if we can help you. We appreciate you being with us. Thank you very much, everybody. See you later.